The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organisation mentioned in this podcast.
Money never sleeps, pal.
Okay, so we're coming to the end of another week. It's Thursday the 22nd, doing this call a little bit earlier than normal this week because, Jeremy, you're on holiday.
Well, yeah, I'm off for a weekend skiing and 40 centimetres of snow falling today and tomorrow where I'm supposed to be at the weekend. So quite happy about life at the moment, I have to say. But yeah,
Very good.
Near the end of another week.
So before your mind wanders to that, it'd be good to run through some of the macro goings on. And then there's been quite a lot in terms of company-specific developments this week.
Yeah, as we highlighted, there's not much new to say in the macro world this week. Increasing talk about the prospect of a second rise in inflation, which is halting the otherwise expected decline in rates. Some people even suggesting that the next move in rates will be up, not down. And I think the question from all that is, are we taking a pause before rates come down, or are we just in a bear market rally? And that's the dilemma the market's in at the moment.
Yeah, and there's no obvious direction, but some of that, certainly the interest rate elements have certainly been a bit of a surprise to people, having had not too many weeks ago, the talk was all about when the first cut will come. Now it's, I
guess the other issue this week, probably the bigger issue coming from the equity market, is the AI bubble. Yeah, what's going on there?
Indeed, yeah.
The AI bubble marches on. Last week, we had significant product launches. This week, we have had results from Nvidia, which is now bigger than Amazon and Alphabet, and has risen a cool 200% over the last 12 months. I think it's Apple and Tesla are sort of lagging in the Magnificent Seven. And thinking about it today, after we got these Nvidia results overnight, never mind the Magnificent Seven, it's sort of becoming the Magnificent One. Jensen Huang talked confidently about the AI tipping point that we're now through and how the world is entering a whole new investment cycle in chipsets and data centers. Nvidia's revenue more than tripled to $22 billion in Q4. Just amazing.
Yeah, a business that size to triple, exactly, yeah.
And most of that revenue came from a part of the business that didn't even exist a few years ago, the data center division, which is growing at 400% year on year. So this is huge, and it sort of lends some credibility to this idea that Sam Altman has been talking about, the OpenAI CEO, who's rumored to be trying to raise between $5 and $7 trillion. That's $trillion that he feels is needed to repurpose the world for artificial general intelligence. It's a thing, and I think it's the big for equity markets because it's sucking in so much capital. It is the biggest thing in town, without doubt.
Yeah, and it's extraordinary. I mean, the way they've performed and the market reaction, it's almost exactly the opposite of what I might have thought in terms of we've been thinking about maybe it'll start to ripple out and it'll be the next layer down of companies who are beginning to benefit. And I think that will still happen. I think there will be very, very significant changes in the business models or the business strategies of lots of businesses. But for now, the clear way to AI is through Nvidia, and almost Nvidia only. I mean, the other stocks are up, but nowhere near as much as Nvidia.
I'm in the process of writing something about this, and I think it's still the case. There will come a point when, if you think back to the dot-com boom, where Cisco was the picks and shovel provider for the thing called the internet that was coming, it became the largest company in the world. In the same way, Nvidia, it's not quite the largest company in the world, but it looks like it will be soon, the way things are going, is the picks and shovel provider for AI. So it didn't last long in the case of Cisco. I mean, Cisco remained a large company and still is a large company today, but it isn't in the premier division. And what happened next in the dot-com boom was you saw this dispersal of returns, and you saw some of that capital, some of those flows that otherwise would have got into Cisco and the big telcos going into anyone that had a half-working website, and
they became dot-com startups, and
they became billion-pound businesses overnight. Yeah. And I think we're starting to see that, happen. I think we're starting to see that happening at the same time as the phenomenal rise of Nvidia. And I think I don't think Nvidia will be able. It's almost unimaginable that Nvidia will be able to retain its market share and market position in chipsets for AI. Might be wrong, but I think it's highly unlikely. I think as that realization dawns, and I don't know when that's later this year or later this decade, but when it does happen, some of that capital will disperse into smaller capitalization stocks. You don't have to go too far down. I mean, last week, I think it was, or the week before last week, the ARM share price rose 80%. Supermicro, which I happen to follow because it's the largest holding in the Herald Investment Trust, is up 275% year to date.
Wow. Okay.
So, and even Relics, the old Reed Elsevier in the UK, got a bump on the back of its AI credentials. So this sort of dispersal of this capital build-up of AI, I think that will be the next stage of the of the bubble. But I think, for now, it's all about it's all about Nvidia. I mean, that's right. They're just stealing the show.
But you're absolutely right. And I remember during that .com boom time, I was covering the web hosting sector, and the question was all about how many servers does the world need? How many data centers does the world need to house those servers? How much power will they all need? All of those sorts of things.
Or how much fiber optic cable do we need?
Correct, yeah. And the maths was fantastic. There were huge sums being talked about. And then suddenly the technology moved on again, and you could house one website didn't need its own server. You could suddenly house 50 or 500 websites on one machine. And then it was 2,000. So the maths changed very quickly. And that sector fell down, dramatically because the technology moved on. I think the issue with Nvidia is it's difficult to see that technology moving on dramatically from somebody else. I mean, that they keep moving the technology on so strongly themselves that they've been riding that. There's always the risk that somebody else will start to do things differently, or the requirements, people will start to have enough of these chips and enough of these processes to do what they need. And at the back of my mind, I'm always conscious that you don't need a massively powerful AI engine in every room all around the world, because we've got the internet, we've got connectivity, so we can connect to the AI. We don't need thousands or millions of instances of the AI. We just need a few, and we need to be able to connect to them efficiently and smoothly. So there will be at some point a flattening out, but you're right. At the moment, the growth is just phenomenal, and the ripple out effects are. There are many of them, and it'll be interesting to see how they evolve over time.
Yeah, and I think to the analogy of the .com boom, none of us who lived through it spotted the likes of Amazon. This point in the cycle when Cisco was the largest company, the headlines about Amazon, to the extent there were any, was that it was about to go bust and that it can't possibly survive, and because it won't get financed. No, we hadn't heard of Facebook at this stage, and Google wasn't listed, but was just everyone was we didn't know what the
search.
Well, it was the way you did search. It was fantastic, but no one knew what the business model was. The idea of page ranking and AdSense and ad search, we hadn't even considered it. And if you think about all the business models in that last 25 years that have been disrupted by the internet, I think it gives you an indication that we haven't even begun to conceptualize what the winning business models are going to be of this wave of innovation on the back of AI.
It's going to be an exciting road.
So it will, and I think it's going to be very interesting. Yeah.
Closer to home, we've had a bit more going on the UK quoted scene with some of the small caps. A few companies reporting now and some trading updates. Not a lot of them not so good across a couple of industries. We saw Springfield Properties, I think, on Tuesday with some decent results. The shares have performed well, and I think they've managed to navigate pretty well so far through this difficult property market in which we find ourselves, but they seem to be doing a good job of that. Doing
more land sales as well. I think there's more of that to come. So
yes,
they seem to be managing the downturn pretty well, actually.
Yeah, I think it's a very pragmatic response to the market they're seeing, and hopefully the housing market will begin to recover at some point as these interest rates do eventually start to come down, whenever that is. But so that was good.
We had a bit of bid activity return to the mid-cap space because we've had confirmed approaches having been made for Currys, the electrical retailer, from Elliott Advisors, combined with speculation in the press that other people, including JD.com, the Chinese internet retailer, is also expressed interest. Now, of course, Currys is pretty interesting. Mike Ashley of Fraser's fame holds a stake in Currys and AO World. So there does seem to be a bit of a play going on for the right to deliver your next fridge freezer, and among other things, of course. I think the background here is that, obviously it's an interesting market in its own right, white goods, and there's an interesting kicker that can come from an eventual recovery in the UK housing market. Once housing is, when we spoke to Alistair a couple of weeks ago, is talking about the potential for the recovery in housing transactions. People move house, they buy new white goods. It's good news. The other sort of thing that's happening in this space is the gentle but unmistakable demise of John Lewis, which can't really keep up with the innovation and the specialization of people like AO World, and also the smaller, but I think very interesting one to consider in all this, the smaller company that competes with AO World, slightly higher end, is Marks Electrical, who
Yes.
I think is a very interesting founder-led entrepreneurial business that is it's a tough business, delivering and installing dishwashers and washing machines with 24 hours notice anywhere in the UK is clearly a logistical complexity. But I think there's a lot of there's bid speculation and attention being focused on this space.
Yeah, no, it's good. There was some negative news from a few of the businesses involved in, I guess, importing of physical goods for industrial and scientific markets and healthcare. We had XP Power last week with their challenges, and there's been a couple more this week, I think.
Yes. So Dialight and Gooch Housego were the two that caught my eye. The Dialight was talking about challenging market conditions persisting through 2024 with longer than usual order cycles for major projects due to inflationary pressures. They talked about economic uncertainty, particularly in key US markets, which is slightly strange, or, in terms of for most people, it's been markets outside the US, but there we go. It basically was warning that 2024 is going to be more about, maybe more second half weighted. And then we had Gooch Housego, which is much more high-end technology business focusing on industrial and medical markets with its photonics and laser technology. But they warned that their customers have been reducing inventory and reporting near-term demand weakness, and that this weakness has been more prolonged than they anticipated. And again, profits expected to be below previous guided levels. So we've kind of got a bit of a question here, how many specific warnings? So just to my reckoning, we've had Gooch Housego, Dialight, as you say, XP Power last week. I think a couple of weeks before that, Trifast. How many specific warnings does it take for a trend to be discerned here? So
no, absolutely.
Just sort of thought it was quite interesting.
Looking to next week, be interested. We've got quite a bit coming up.
Yeah, it's a busier week in this upcoming week. Next week, we're going to get, Monday, we get Japan inflation, where expectations are for a year-on-year decline from 2.6% to 2.4%. Tuesday, we've got US durable goods orders for January, expecting a month-on-month decline of 4.5% from a flat figure in December. And we get US house price data for December, which should continue to show a similar level of growth in US house prices, which have been strong, around 6.6% sort of year-on-year growth. And then on Wednesday, we get US GDP data for Q4. I think this is going to be the biggie, where expectations are for a slowdown of quarter-on-quarter growth from 4.9%, which I think most people would expect to be unsustainable, to a more manageable 3.3%. But let's have a look at that and hear what people are going to say about it. And then on Thursday, we get inflation data for January in the form of core PCE data, which Jay Powell always said was his favorite measure of inflation, where an increase is expected. But the flash figure for the month is from 0.2% to somewhere between 0.3 and 0.4%. So could be a few nerves on that one. And then on Friday, there's US ISM manufacturing PMI data. It's going to be hovering around the 50 level, which indicates flatlining. And also on Friday, we get Euro inflation flash data for February, which is going to show a flattish annualized rate of around 2.7%. So highlighting that the issue in Europe is more about deflation than inflation, I would say, going forward. But I think out of all that, we're going to get guidance on US GDP and core price inflation. So I think it's going to be back to the looking at indications of what the trajectory of interest rates are going to be like for the rest of 2024. And I think those two pieces of data will be key in that calculation.
Yeah, some important numbers coming up next week. So yeah, fantastic. Great. Thank you very much, Jeremy. Great to run through that all again. So we'll call that a wrap for this week. And just for one of our listeners, it's good to say, hope you sleep well, Lorne.
Yeah, sleep well, Lorne.
Brought to you by Progressive Equity.